the Bushels and Beef Farm Tour and Podcast, where producers talk markets, share stories, and cut through the noise in agriculture.
Welcome back to the Bushels and Beef Podcast. Crop insurance spring prices just got released, which means farmers can now make decisions on revenue protection policies for 2026. Jordan Hinkeldey is back to discuss what these prices mean and the safety net programs available through ARC and PLC. Jordan's a crop insurance expert from Alta, Iowa, helping producers navigate these decisions. Jordan, welcome back.
Thanks for having me. Appreciate it.
Definitely. Last time we talked ECO subsidies and tying insurance to marketing. Today we're talking spring prices. Before we dive in, how's crop insurance season treating you? And I see that beard is still going strong, so you're holding on to that bet there.
Yep, I just keep trimming it. It's getting annoying. I'm ready to be done with it. I'm 100% ready to be done with it. Just want to shave it off, and I don't know. I might be shaving it off sooner than later if these cyclones keep losing, because I don't know. A little superstitious that way too, I guess.
Yeah, definitely going to need something to change here going into the Big 12 tournament. So we'll see if that beard stays.
We're gonna need some help.
So yeah, crop insurance spring prices were just released a couple days ago. So what are the numbers and why do they matter?
Yeah, so we're looking at $4.62 on the corn. So we're down 8 cents year over year. So not a huge change. Premiums are down. Volatility was pretty low. So our premiums are going to come in a little lower than last year already, with them being subsidized even more last year. With the volatility factor down, that helps us on our premiums as well. Beans came in at 11.09. That's like 54 cents difference. So that was huge. Get that guarantee really pumped up here. Get everything rolling for these guys where they can actually cover something. So it's awesome to see these prices where they're at. Beans had a little higher volatility. The premiums will be down probably about even or flat on beans, just because that little volatility increase and the price increase. But we did get that subsidy as well, so actually they might be flat, maybe a little bit down that way. Referring to ECO, obviously we're down year over year because that was subsidized so massively, like we've discussed before in previous podcasts. So sales season's going good. We've got a lot of interest. Picked up quite a bit of guys this year, and thankful to pick those guys up, and glad they're going to deal with us on that, and very thankful that our current customers keep hanging around and keep kind of taking some of our advice that way. So
definitely. Let's break down revenue protection for people who might not be familiar with it. What is it and how does it work for this year?
Yep. So our general revenue policy. So when we get our spring price, we take that times our APH and then times our level of coverage, so typically 80 to 85%. So what happens is that'll cover us here, all the way through spring, all the way through fall. If that fall price does come in higher, we'll get the higher of the spring or the fall price. Generally, that's a really cool thing about our policy. We start thinking about droughts, and we start thinking about, heck, it could be too wet again all of a sudden out of nowhere, and we have that backing of it. So if we do have a price fluctuation where the fall price does come in higher, we're going to get that higher price, so we can raise our guarantees that way as well. And that's the basics of our policy. Then that MP policy, it covers anything. Active God policy is what they always call it. So anything weather related, we're covered from that standpoint.
Okay. So you're not just protecting yield or price, you're protecting overall revenue with that, right?
100%. Yep. And that's our revenue right there is yield and price. So I mean, we're protecting both, and livelihoods, because our break evens this year on the corn, this year maybe an 85% policy won't quite cover that. That's kind of why we reach out for that ECO. On the beans, kind of the same way. That ECO gets us up to that 95%. So we've seen a lot of guys flock towards that coverage just because of the higher trigger points. So we like seeing our guys covered up, and I think it's a great program to go with. So.
Yeah, there's definitely some stronger safety nets out there too this year. So beyond crop insurance, there's talk about farmers having a stronger safety net this year. There's a lot of new changes that rolled out this year because of the one big beautiful bill act. So what's changed there? What can farmers expect from that?
This ARC and PLC programs, they've been around for quite a little time here. This year, though, with the marketing year averages, they kind of phase back 2 years first. They go 2 years back and then they take a 5-year Olympic average. Well, those were really good prices. What we're looking back towards, the 2020 to 2025 or 2019 to 23 this year. The next year is 2020. But we get the high and low of that, and they came out, they're like 503 and 1217 on the beans. So, we take 90% of that with the ARC County policy and then tie it to the yield in the county. The PLC reference prices, I think those were 440 and 1040. But right now, where it sits, we're kind of in claim territory. So like we're protected through these government programs right now, I'd say through the rest of the year. But, with these price gains, the price gains that are going on right now with corn and beans, it might be taking away a little bit of that indemnity. But I'd say the lower we go from here, the higher our possible payments are on this ARC and PLC program for 25, and those will be paid out in October. So as it sits right now, I think the last monthly update we got was sometime in February. We were sitting at I think it was about $50 an acre projected on corn, maybe a little higher. Beans, they were at about 25, but I think with the bean price going up a little bit, depending on how long that soybean price stays high, we could see that pull back a little bit, a little less payment. But, with our current policies on crop insurance, set in place now, and the one big beautiful bill, the subsidies involved, and then, we just got our bridge payment for guys that signed up for that. On top of the ARC and PLC, we're looking to be pretty well covered overall, for the 25 year and into 26, because again, these safety net programs, the ARC and PLC, they're becoming extremely effective as we go forward with lower prices. Going into even going into 26, we'll have the same reference prices. So big deal.
Yeah, definitely. So spring prices are out, and we know about ARC and PLC. So what should producers be doing right now then?
Get into your guys. Get into your crop guys. Hopefully us, obviously, but I'd say get in there, get your coverage selected. We know the prices now. If you're looking for, auxiliary products is what I like to call them. Maybe some private products. Stop in, talk to us about them. Everyone has their own private products. So not seeing a crazy amount of guys wanting to spend extra money on that stuff this year, outside of the ECO. The ECO is going to be very popular this year, but it's nice to know those products and what they can do for you. Most of them are tied to ECO, so sometimes they're figuring, hey, we might end up with an ECO claim and it might offset that other private policy. So I can see why guys probably don't want to reach out and spend money on some of them. Some guys love insurance. If you don't forward sell, and you don't market around your plan, insurance is pretty much the only kind of safety net you have that way if you're not doing that stuff. So it's a big deal. It's been a really good spring that way, and hopefully guys keep coming in, and hopefully guys keep signing up for some extra stuff for extra protection. So
yeah, and they've got until March 15th, right, to get stuff signed up.
Yeah, and March 15th is on a Sunday this year, so they extend it, I think, to the 16th possibly. But having those contracts signed before the 15th is what we want to see. So that Friday it'd be like the 13th, so that'd be kind of nice to be all wrapped up with all this stuff, a couple days early. So
how many times does your phone ring on the day leading up to the last day?
There has been some late changes. Most of the time, I'd say this, I'm getting a lot done this week. It's been a busy week, and next week will be even busier. But just getting kind of our current customers and then the new guys getting signed up too. It's just important to get all that paperwork in and get it done right, and have all the I's dotted and T's crossed. So.
So yeah, kind of the message here is, number one thing, spring prices are set. Number two, decisions can be made still. And the third most important piece here is don't procrastinate.
That's right. Also, get those production reports in. That way we can kind of figure out that county yield for last year's possible ECO payment as well. Because, we get some preliminary data from our AIPs, and each month we start looking at them, and it's kind of cool to see the changes in yields. And, we can start projecting possible payments, out to our guys. So we already do that already. But again, those are projected. We don't know we don't know it 100% certain. So yeah.
Let's close here with this important question. So, you talk to lots of producers here and answer a lot of questions. What's the one thing producers get wrong about crop insurance every year? Do you see a common theme, or what's kind of like the biggest bottleneck that you seem to help people get through?
Oh, man, I would say, I mean, the biggest thing, we always have year in and year out, you have, certain people that say, it's crop insurance, it's a scam, it's a what, you have some guys say, well, I just missed my deal by 1% and, it's actuarially sound, and, they're not wrong. I mean, it is part of the game, having it out, but there are several producers, myself included. I mean, the last few years, I mean, I've had claims at the 85% level like crazy, but I'd say a big thing is, if you're not getting claims at that 85% level on your policy, and you haven't for a while, well, then just, back your coverage down, cut your premium down, $6-7 an acre, sometimes 10, depending on the county, cut your coverage down, then save some money on the front side of it, and basically still have that great safety net below you, but just cheapen your insurance up. I'd say the big thing is you don't just have to take out an 85% policy and nothing else. I would say, we can rearrange that policy to being, take it down to 80 and then throw ECO on top or add SCO to it. There's just a lot of options that guys have. I'd say the biggest one is just, coming in, turning in, saying, hey, I just want to do this and nothing else, and just continually do that without change. We got so many subsidies and everything's so affordable, honestly, like on the insurance side now, that it's tough to not want to try anything new, because it is a lot cheaper and we're getting a lot of coverage with that.
Mm-hmm. Yeah, for sure. Well, I think that's our last question here. So, Jordan, thanks for discussing spring prices, revenue protection, and the safety net programs that are available this year. So this information should help producers understand their options as they make decisions.
Hey, anytime. Hopefully guys get in. Hopefully guys get signed up, and then it's on to the March Madness here. So because this is March.
Go.
Let's go.
Yep. Yeah, if you're a producer and you want to discuss your crop insurance options, especially with spring prices now set, reach out to Jordan and the team at Logic Ag Marketing. They've got licensed crop insurance agents who can review how these programs work for your specific situation. And a reminder, the deadline is March 15th here. That's episode 9 of the Bushels of Beef podcast. Thanks for listening, and we'll see you next week.